Hello everyone, this is week 9 of the macro overview series, and this video will cover the major macroeconomic news in the Americas and EMEA region in the past week. So yeah, let's just kick things off. I'd like to first talk about the situation in Americas. So I'd like to talk about inflation in US and how it's been increasing. There has been an increase in the PCE, which is the Personal Consumptions Expenditure Price Index, and it's just to give some context. It is an index which measures how much consumers are paying for goods and services, and it has been increasing at the rate of 0.6% on a month-to-month basis. And this increase in the PCE has triggered a Wall Street sell-off. Um, on an annual basis, on a year-to-year basis, the PCE rate has increased to 5.4% in January. Uh, so, as inflation is increasing and rising, in expectation that the Federal Reserve might lean towards pushing interest rates further higher, more high, um, in order to moderate the economy and get inflation back down, investors adjusted their interest rate expectations, and this is actually reflected in the stock market as the S&P 500 closed 1.1% lower on Friday, taking the blue chip index's loss for the week to 2.7%. So, inflation has been increasing, and Joe Biden, U.S. president, has suggested that they have been working on on bringing inflation down, but he's also suggesting, and it's pretty clear that there is a lot of more work to do. I'd now like to talk about the situation in Latin America and how the gig economy is increasingly becoming more and more prevalent. Uh, like I said, gig economy is increasingly becoming more prevalent in developing countries, but particularly in Latin America. And also there has been an issue in regards to the gig economy in Colombia, to be specific. Just to give some context, a gig economy is essentially a labor market which relies very heavily on temporary positions and part-time positions, which are filled by freelancers or independent contractors rather than full-time permanent employees. Like I said, there has been an issue in Colombia in regards to this. The newly elected President Gustavo Petro has decided to regulate transport apps, which has had a positive effect on Colombians, but several government proposals have also suggested that they'll be fining users $2,000. Um, and this has created an uproar among New Colombians. Like you can see, the gig economy has several advantages, but it also has several disadvantages. Uh, Talking about the advantages first, the gig economy can help many who lack qualifications, such as migrants from Venezuela, and it can offer people, gig workers, short-term profit and as people earn more money and they can also gain flexibility. However, in the long term, it is harmful, and short-term and unstable employment styles like this are not desirable. So reliance uh, increasing reliance on the gig economy can keep incomes low and prevent job progression as well. uh, just to give an example, the apps that I spoke about, they do not offer minimum wages, health insurance, or pensions. Like I said, gig economy has several advantages and disadvantages. Further, the new president would also like to impose a greater tax burden on foreign technology companies, and this actually aims to increase government revenues, which can be reinvested into the country, as large companies such as Netflix, Spotify, etc., already make very significant profits. The issue with this type of legislation is that it will most likely discourage companies like these from investing in Colombia, or the increase in taxes could be then passed on to the consumers in the form of higher prices of goods and services, which would then again harm the economy and create an overall welfare loss. I would now like to move on to the EMEA region. So, first, I'd like to talk about the set of sanctions that have been imposed on Russia once again by the EU. So, the EU has agreed upon the 10 sanctions package against Russia, and the sanctions have now are now targeting more officials and companies that are accused of supporting the Russian invasion in Ukraine. Uh, Moreover, these sanctions also include tighter export restrictions regarding dual use and technology, and assets have also been frozen of three Russian banks and seven Iranian companies. Uh, Moreover, transactions with some of Russia's largest banks are also now prohibited. Um, so mainly this is the 10th package, 10 sanctions package, like I said. So there have been a set of sanctions before that are imposed on Russia and has actually affected Russia. And EU has now decided upon this 10 sanctions package as well because they are aimed at undermining Russia's economy and reduce and drain funds for its war effort. Next, I'd like to talk about the situation in Germany and how there's fear of recession returning as the German economy shrank 0.4% in the fourth quarter. So, like I said, inflation has been high, and increasing inflation has had a negative effect on consumer spending and investing. Um, and investment, for example, the consumer spending fell by 1% in the 3 months to December last year, and German investment in construction and equipment, such as machinery, vehicles, etc., fell by 2.5% on a quarterly basis. So, further, Germany also has had a weak trade surplus. As exports have fallen by 1% and imports were down 1.3%. Uh, so lastly, household spending has also taken a hit and affected negatively as they've dropped after the government ended some support measures such as discount on fuel. Uh, so as a result, this fall in GDP has the potential to have a knock-on effect on Eurozone GDP as Germany is one of the biggest European economies. Um, However, although Germany is going through economic crisis uh, and they have had high inflation, which has affected a lot of things. On a more positive note, German government spending has risen by 0.6%. Thank you so much for watching this video. I hope you all found it informative and learned a little something. Uh, This video was an overview of the major macroeconomic news in the EMEA and Americas region in the past week. So, yeah, I hope you all enjoyed it and see you all next week.